Another week, another opportunity. Hi everyone, welcome to Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. Markets took a hit last week with the PSEi down 2.4%, closing at 6,303.72. We'll dive in what sparked this sell-off as we explore number 1, the impact of SMIC and SM Prime's big block sale, number 2, the weakening of the peso, number 3, BPI second quarter performance, and number 4, fake news on a 20% tax on bank savings. And as always, stay till the end for our stock spotlight. But first, our market overview. Markets ended sharply lower with losers beating gainers 157 to 113 as foreign selling accelerated to 3.4 billion pesos from just 799 million the week prior. The main catalyst of the drop was a $221 million block sale of SM and SM Prime shares. This raised concerns that the investor who sold might be offloading more Philippine stocks as block trades often trigger broader sell-offs. Adding to the pressure is the peso weakening by 1.2% to 57.15 as the US dollar climbed 0.6%. A weaker peso hurts foreign inflows and translates into lower peso-denominated returns, increasing foreign selling pressure. Now let's talk about the big block sale. 9.6 million shares of SM worth $143 million and 189 million shares of SMPH worth $78 million were sold as part of a big block sale with both stocks selling at a 4 to 5% discount. Stocks of SM and SM Prime dropped 7.9% and 6.1% respectively because of this. Other stocks were sold off too due to concerns that the seller of SM and SMPH shares may have other stocks that they plan to sell. However, we think that this sell-off is a buying opportunity. Block sales are only worrisome if insiders are the sellers, as this would imply that they think their stock is already fairly valued. This time around, it was a foreign institutional investor who sold. In fact, both SM and SMPH recently announced a share buyback program to enhance shareholder value. Both companies also said they believe that their shares are undervalued. Next, we have BPI, whose 2Q net income was up 6.6% year-on-year at 16.3 billion pesos. Their loans grew by 14.1% and net interest margins expanded 36 basis points to 4.59%, leading to a 17% increase in net interest income. On top of that, non-interest income also increased by 8.4%. However, profits were somewhat disappointing as loan loss provisions more than doubled to 4.3 billion pesos from 1.5 billion pesos during 2Q last year. Moreover, non-performing loans or NPL cover deteriorated to 97.1% from 127.6% despite this. Could BPI have made a significant write-off of bad debts, explaining the drop in the NPL cover? And could we expect the bank to stay more aggressive in setting aside provisions because of its growing exposure to consumer loans? If so, this does not bode well for future earnings growth. Malacanang last Friday debunked fake news spreading that a 20% tax will be imposed on bank savings because of the Capital Market Efficiency Promotion Act, or CMEPA, which took effect on July 1. The palace clarified that the tax applies only to the interest earned, not the total amount in the account. They also said that these taxes have already been in place since the 1990s. The only change resulting from CMEPA is the removal of preferential rates for deposits that are locked in for longer maturities. Previously, interest income on deposits of 5 years were tax-free. Also, less than 1% of total deposits will be affected by higher taxes. On the flip side, CMEPA made it cheaper for Filipinos to trade stocks as the stock transaction tax was reduced to 0.1% from 0.6%. CMEPA also made it cheaper for Filipinos to buy mutual funds and UITFs as DOC stamp taxes on these products were removed. The DOF is hopeful that the lower stock transaction tax and removal of DOC stamp taxes will help boost investments such that the higher volume will more than offset the negative impact of the lower tax rate on total tax revenues. If you're old enough to remember, when I was young, I remember my parents always told me na huwag kayong mag-alala, laging mataas ang interest rate. So, save ka lang dyan, lagay mo lang interest, tapos laging nagdi-depreciate ang peso. If you have enough, buy US dollars. Pero, kung maalala mo nung dating panahon, gusto mong bumili ng bahay, ipon ka, hindi ka makakautang. Tapos yung mga tao walang kotse, 'di ba? Kasi hindi rin sila makautang ng 5 years kasi walang ganon. And the only reason bakit ngayon makautang ka na ng 15 years, makautang 5 years for a car, kasi nga yung finances ng government nag-improve.
Now?
Oo, because of the VAT. Yung VAT natin kasi dati mababa eh. So they address the finances, yung debt to GDP natin bumaba. Kasi nga they were able to raise enough revenues. Hindi pwedeng yung lagi kang wala, tapos dati mataas ang interest. So, sino nakinabang? Mayayaman lang na may pera. Pag wala kang pera, paano ka hahabol, di ba? Kunyari, nung 1990s or early 2000, bibili akong bahay. Umutang ka sa nanay mo, umutang ka sa tatay mo. Umutang ka sa bangko, sige, bigyan ka 18% interest. Tapos, special rate na yon. So, in general, parang dati, kunyari ikaw, magpapautang ka sa taong, alam mo, wala naman siyang capability. Gusto mo, mataas ang na-earn mo. Versus, let's say, nagpautang ka sa mayaman, alam mo namang babayaran ka, pumapayag ka ng lower interest. So, when we started showing nga na, uy, may pera pala tong Pilipinas, kaya palang magbayad. Kasi nga, nakakapag-generate na ng revenues. Nung pinakita natin yun, bumaba yung interest. For our stock spotlight, we are shining the light on e-gaming once again. Plus plunged 40.2% despite rebounding the week before. This comes as the BSP released a new draft circular tightening online gambling payment regulations. Here are the new requirements according to the circular. These rules are a huge deal for Plus as 80% of top-ups are done through e-wallets like GCash that are now facing stricter regulations. Most of Plus users also belong to the mass market who don't make top-ups of over 5,000 pesos, the minimum proposed by Senator Gatchalian. There are talks that Plus might not be included in the Philippine Stock Exchange Index as it rebalances in August despite hitting the criteria. According to the PSEi's index management policy, companies whose share price have fallen significantly may be excluded to ensure that the PSEi index is representative of the market. Note that due to the crackdown on online gaming, Plus's share price has dropped by a whopping 70% from its peak of 65 pesos in June to a low of only 19.54 last Thursday. But on the other hand, bulls or optimistic investors may argue that Plus' steep drop already reflects the bad news, leaving limited downside and potential upside. If Plus isn't included, RCR will take its place. This possibility explains why shares of RCR jumped by 5.7% last week. At this point, though, we don't know what the final version of the new regulations will be, how investors will react to the new rules, and what Plus will do to adapt. We can't tell if the stock's current price is considered cheap. Because of these, we're keeping a hold rating on Plus. Here's what to look out for. PSE's announcement on which stocks will be added and removed from the index this week. Upcoming corporate earnings and how the market will react. In the US, new and existing home sales and initial jobless claims may influence Fed rate trajectory. The big question is, will investors pivot back to opportunity bargain beaten down names or remain defensive after last week's shock? Only time will tell. That concludes this week's episode. If you found this market rundown helpful, don't forget to like, subscribe, and hit the bell so you're first to know what's moving the market. I'm April Tan. A new week is a new opportunity. Remember to stay sharp, stay selective, stay dry, and as always, invest intelligently.